It's worth understanding this is the fourth year we've produced this benchmark report. Not only are we looking at the data behind all the deals that are closing won or lost, but then looking at retention, renewal and upsell opportunities as well. Being data-driven is more than just helping the leadership make decisions. It's also about articulating to our team why we're making those decisions and why it's really important that they achieve that level of engagement. Introducing consistency isn't just about the sales process. In fact, more often than not, the consistency we need to introduce is around leadership. We live in a world where 78% of reps didn't hit quota last year. The problem here are not the sellers. What we need to do is
Hey Guy, how are you doing today?
Very good, thank you, and thanks for having me on the podcast.
Of course, absolute pleasure. So look, you guys just released the Ebsta report. It's out there, fresh off the oven. I want to get into it. Would that be okay if we walk through a quick overview? Because I know a lot of people download these reports, and when it comes to really going through them and understanding and absorbing it, putting into action, we might again forget. So now we have the guy on the call. I want to share the screen and literally walk through it. And then I ask some questions just to understand and for our clarity of what's going on in 2025 when it comes to revenue teams. So if you're up for it, maybe.
Yeah, quite happy to. So I'll share my screen and give the audience a quick whistle-stop tour through. But let me start by sharing my screen. It's worth understanding this is the fourth year we've produced this benchmark report. This year was the first time. In previous years, if you're eagle-eyed, you'll notice that in previous years it was called the sales benchmark report. We've extended that out to the right-hand side of the bow tie. So not only are we looking at the data behind all the deals that are closing won or lost, but then looking at retention, renewal and upsell opportunities as well. So hopefully the audience will find that useful. Now, the data that we analysed, over the last year, we've analysed 655,000 opportunities representing nearly $50 billion worth of revenue. The data's come from 387 customers of Ebsta, but also for the first year ever, we did a survey that over 2,000 CROs and VPs of sales were involved in. We gathered a lot of their information around kind of their journey and what they're looking to achieve over the next year as well. We also analysed nearly 250,000 minutes of sales discovery calls. So last year we looked at a whole high volume of calls. This year we've really zoned in on the discovery element of the calls to truly understand what are the top performers doing in their discovery different to everybody else. So at a high level, the numbers are looking broadly positive. We are moving in the right direction. Win rates dropped slightly from last year, but most importantly, deal values jumped by a huge 54%. So it looks like the market's moving up market. So we all recognise that selling to very small businesses is a challenge, or perhaps takes just as much time and energy as some of the mid-market or larger deals. So we saw average deal values go up by 54% in the last 12 months. And the sales cycle in itself has actually reduced slightly. So we're able to get customers through that process a lot better and faster. The biggest challenge we saw, though, is that nearly 80% of sellers missed their quota last year. And that's huge. And the delta now between top performing sellers and the rest of our sales team has grown to the largest point we've ever seen at 11x. Now, I think there's some reasons behind that. We'll talk a bit more about that sales velocity in a few minutes. Deal slippage also reduced slightly, so that was positive. We could see about a third of deals are slipping past their anticipated close dates.
Can I ask a quick question about previous slide?
Yes.
First and foremost, just for my clarity and the audience, are we looking at certain industries or verticals, or this is across the different customer segments?
It's a really good question. I haven't got it on this slide deck, but there is on the very first page, you've got a breakdown of the industries and the markets that the data has come from. The headlines are that that technology businesses represented over a third of the companies surveyed, and the employee range, most of the businesses were somewhere between 50 and 500 employees. So again, there's a whole breakdown in the report if you want to see exactly which industries it's come from. But 100% of the respondents are all in B2B. The majority of them are B2B SaaS. but there is B2B consulting businesses in there as well. We've got some oil and gas businesses. There's a whole range of companies in there, but
Amazing.
yeah, hopefully it'll give everyone a bit of a. There's further breakdown on these data points in the report itself.
All right. One more quick question about the previous slide, because I think it's important to understand what's going on right now. So it seems like things are getting a little bit better, a little bit better. So what's the reason behind this? Can we come up with a quantitative, let's say, answer to this? Like, what's happening? Are we doing better in upskilling our reps, or market is opening up, or what's happening?
I think there's a number of takeaways from the report. Obviously very excited about the fact that deal values are going up dramatically and sales cycles are reducing in time. I agree with you. I think we've hit the bottom and coming on the way up. I think some of the numbers are perhaps slightly artificially negative. We churned a lot of our sales teams last year. And getting those sellers now ramped and delivering value takes time. And that's perhaps will justify some of the delta between our top and bottom performers, and the fact that 78% of sellers missed quota last year. So I'm optimistic. We've seen a lot of investment in standardizing a process, and we're going to talk about a little bit more about that as we go along. The silver bullet here to get more sellers hitting quota is consistency. Really getting under the skin of what our top performers are doing every day at every stage of the sales cycle, whether that's prospecting or discovery or qualification, the way they run their sales cycles, the number of stakeholders they're engaging with, which personas they're engaging with, the way they're qualifying deals out earlier. When we understand what those top performers are doing at a granular level, and we can turn those insights into pictures that the B and C sellers can understand, very quickly that their desire to win encourages them to go along the same journey. And if at the same time we can take away the burden of any admin associated to their job by introducing AI technologies, all of a sudden they've got no excuses to do anything but sell. And if you've given them the playbook as to how to win because you've done the analysis on the past, then you're in a really good place to hold them to account as to what good looks like. So, for example, we see lots of companies when we go in, they've got maybe a 5 or 6 stage sales cycle, and they spend a lot of their time jumping stages, jumping forward stages, jumping back stages. There's very little gates and triggers between the different stages. However, if after you've done the analysis, you know that on average your B player has got a win rate of 12%, but the A players have a win rate of 38%. Well, then you start wondering, well, what can we do to bring the B players up to A player standard? And it might turn out that the A players don't leave their discovery stage or stage 2 of your sales process until they've got a minimum of 6 stakeholders actively bought in. One of them has to be a C level, and they need a finance persona with an engagement level above 67. Now, knowing that, the A players do it anyway. But if we understand that, then we can start to put that in as a specific gate and not allow the B players to leave the second stage of the sales process until they've achieved the same thing that the A players achieve. And very quickly, you can start to gamify that and get everybody, as long as you can police it correctly and you're able to hold people to account, you'd be surprised how quickly we can get the B players performing at a similar level to the A players. I talk a lot about sales velocity, and a lot of times people ask the question, so how is that calculated? So I wanted to give your audience a bit more visibility of that. So what we can see is when we look at, these are the 4 metrics that you should be thinking about every day. So number 1, from a deal count perspective, your top performers are probably working 2.5 times more deals than the B players. On average, we see that their average deal values are nearly 3/4 of 76% higher. And we can also see that the top performers are achieving a win rate that's nearly 50% higher than the B players. We also can see that we know that time kills all deals. So understanding the influence of time on the win rates is really key. So this is the calculation we use to calculate sales velocity or dollars per day worked on a deal. And if you can get the beauty of this model is you can compare people working enterprise versus SMB, because it brings it down to a dollars per day number, and it really helps us to understand who's really giving us the best return. So looking at the state of go-to-market, we've got the old bow tie here. First of all, looking at the data, there's been a lot more alignment between sales and marketing. We saw conversion rates of MQLs to SQLs up to 68%, which is massively, which is a big increase compared to last year. The volume of leads being worked, though, is a challenge. We saw that it's increased by 20% since last year. So just because we're spending more money on marketing and generating more leads doesn't mean we're going to close more business. because the volume of leads that match ICP really hasn't changed. And so for the B and C players, what we're doing is we're giving them more noise. Right, while the A players have always been very good at picking out the individual opportunities that really match ICP. So the win rate for new logos is sitting at about 19% now, which is slightly down from last year. And revenue retention is also down. So people are really questioning the technologies they've already bought, and they're looking at whether they want to keep them or not. But the expansion and the win rates on expansion is really healthy. If you open up a cross-sell opportunity, you are 45% chance of winning that deal. And we're going to talk a bit more about expansion opportunities a little bit later. So how do we unlock profitable, efficient growth? That's what this is all about. And it's about this question around consistency. So I wanted to highlight this point first. We saw last year 52% of new revenue didn't come from new logos. They came from existing accounts. Okay, so if you're looking at where you're investing your time and energy, if you've got an existing estate of customers, I would argue you should be investing more in trying to glean more revenue from those customers than from new logos. So don't underestimate the opportunities that exist within the existing accounts. We'll talk a little bit more about that as we go on. One of the other really startling stats for me out of the report was that just 14% of sellers are now responsible for 80% of revenue. Okay, so our top performers are really starting to step away from everybody else. And you can see here, again, this is in the report, but I won't go through every line, but there's really interesting kind of consistent data points around how top performers differ from the rest of our sales teams. And so you really should be understanding all this information. If you don't have this data point at your fingertips, you need to bring in somebody who can give it to you. One of the other takeaways we saw from this year was a huge focus on moving our go-to-market motion from having individual single-purpose vehicles doing individual tasks to a much more kind of full-cycle sales process. We're seeing sellers now responsible for not only generating their own pipeline and closing their own deals, but also retaining customers for a period of time, perhaps the first year. Now, in my mind, this has a number of benefits. One is, of course, the customer doesn't have to have these kind of handover points, and inevitably they're never quite as strong as they should be. And if your seller has built enough confidence and trust with the customer for them to sign a contract, allowing them to hold on to that customer and make sure they're being nurtured and onboarded and activated correctly means that you're much more likely to have a positive outcome. But we can also see that win rates are higher and the sales cycles are reduced when there isn't these kind of handovers from SDRs or BDRs through to the sales team. So it is more work, but if we can give our sellers, if we can take away all the admin from our sellers using the latest AI tech, we can actually free them up to be much more customer-centric and take on the full sales cycle. Now, I'm old enough to know this model from before the kind of the Salesforce approach to life came to market, and this is how we used to sell. So it feels like we're going full circle. Now, one of the other data points we looked at is how much time people are actually spending with customers. And again, it's a stark difference between our top and bottom performers. Or average performers are spending less than 2 hours a day with their customers, while our top performers are spending nearly half of their day. So this has a material impact. So try and understand, where are our sellers spending our time, and what can we do to take away those distractions? So, for example, teaching sellers how to qualify correctly is one set of skills. Teaching sellers how to record that information in the system of record in a consistent format is a completely different set of skills. Getting AI to build trust with your customer and qualify them well enough is really difficult. I don't think that's what AI is very good at. Allowing the AI to take responsibility from taking the transcript of that call recording and use it to consistently populate, say, MEDDIC or MEDPIC or whatever the qualification methodology you're using back in Salesforce, and then scoring how well the customer's been qualified, well, that can be done, and it can be done at scale. The beauty of this approach is we can also do it for historical call recordings. So a really lovely story we had with a customer recently. They had a particular set of sellers that were losing deals at late stage, and they thought they had a late stage sales process problem. But when we went back and analysed the call recordings associated to the deals closed, won and lost, and our engine can analyse thousands of hours of call recordings in a day, what we found was that those deals that were closing lost in the late stages, they were never qualified in the first place. They weren't actually in a sales process. So really understanding how well we're doing that qualification, and ultimately what you want is to end up in a place where the seller gets a green thumbs up or a red thumbs down as to whether they qualified the customer well enough to lead discovery. And if they get that nod, then very quickly, they only need 1 or 2 red thumbs down before they start to change the way they do their qualification. And allow the admin to be done by a machine means that you've got a much more consistent way of reporting on, for example, what competitors get mentioned or what objections are being raised. And if you see a specific objection is starting to become raised more often, then you might want to do some training on it, or a particular competitor comes up, we start to build a battle card for that one. So the AI can take away that burden, but more importantly, it can give us as leaders the insights that we need to know what we should be doing next, or where we need to invest time and energy to take away the next piece of friction in the sales cycle. Okay, so talking about expansion, we've built Ebsta around this basic principle that relationships drive revenue. And so one of the data points we bring to the table is understanding momentum or engagement. And we score every relationship the business has with every prospect or customer out of 100. Now, we continue to score engagement after the deal is signed. And you can see from this graphic that when the engagement is above 80 out of 100, the potential for generating a cross-sell or upsell opportunity or an expansion opportunity out of the customer is at 52%. So really maintaining those relationships is absolutely key. Now, a really great data points that came out of this for me, or the most fascinating one that I found out of this was if the last 2 QBRs you've done with your customer prior to the renewal are at the C level, you are 7 times more likely to open a cross-sell upsell opportunity. However, if the last 2 QBRs before your renewal are done with someone below the C-suite, you are 4 times more likely to churn the customer. So it's all well and good that you've introduced QBRs, but you need to understand which personas are engaging with your success team and really question as to whether we are engaging with the right personas prior to that renewal. Now, last year we looked at specific discovery methodologies like MEDDPICC. This year we've expanded that qualification visual here to include all of the kind of 7 areas that we consider are important through that discovery process. And this isn't just in the initial phase, this is during the whole cycle or customer life cycle. And you can see once again, there is a material gap between the way our top performers are behaving and our lower performers. Again, there's more detail of that in the report. We also need to understand that time kills all deals. And so understanding that at granular level is really important. So how many days do you spend in stage when you win versus when you lose? And all of these types of funnel analytics about which personas we should be engaging with at different stages and so on are so vital to the way we introduce that consistency across the board. And again, when we've done all the historical analysis, or when we've fixed all the historical data, we're kind of uniquely placed to do that analysis, because it's all well and good producing benchmarks, but if it's based on data that's incomplete because it's what the sellers put in a year ago, you just can't rely on that data. So having an engine that fixes that historical information so that we can then pull out the benchmarks and know that they're true, it is a game changer. So you can see here the difference between those top and lower performers, that the top performers are now nearly 25% more likely to disqualify those non-ICP deals much, much earlier. And as leaders, we should be encouraging our team to close off those non-ICP deals much earlier than they are at the moment. Having crap in the pipeline doesn't help anybody. We also can see that those lower performers are much more likely to slip deals at those late stages. And again, the reason behind that may not be to do with the late stages. It might be to do with the fact they didn't ask the difficult questions in those early stages of the sales cycle. Now, I really like this graphic. What it does is it highlights the win rates, for example, on new business versus expansion opportunities. And you can see here it's so much easier to expand an existing account than it is to win a new logo. Not just the win rates or the number of days it takes to get there, but even the number of stakeholders we need to engage with to achieve that outcome is much less if it's an existing customer. But understanding these data points and which personas are giving you those outcomes will transform the way you run your go-to-market motion. Now, while it's a boring subject, data quality is so vital in this AI world. You've got all of these different tools that are relying on the data in the system of record, which more often than not these days is Salesforce. But you need a way of solving that data quality issue, and it needs to be bulletproof. We can't be relying on humans in this stage. So cleaning that data is really key, but it's usually the overlooked piece because it's boring and it's hard. But we see that on average, 44% of contacts that the team are engaging with at their customers and prospects never make it into the system of record in the first place. And of those, 26% of those are decision makers. So we don't even have visibility of their activity. And even the contacts that are in the system of record, nearly 20% of them are out of date. And so we need a system to keep that clean and up to date. There's all sorts of tools you can use to enhance the data, but we've got to start capturing the activity that the team are doing. And again, AI is really good at doing that.
That's amazing. Appreciate you, guys. We discuss about high-performing reps and basically qualifying at the very early stages of the call based on the ICP they are going, on a call with. So that tells me two things. First and foremost, maybe our processes are broken. So when we talk about processes, is the fact that we don't even communicate this with our entire org. Maybe A players already know this by default because they've been there doing this and they consistently going through the process. The fact that we are not even communicating that you need at least these 5 decision makers on the deal when you run your discovery calls until then you can move them to demo or other stages. Based on your experience working with your current clients and seeing the market, what's the main issue that people don't get this process right? Is it that the leaders are not aware of what's actually not working? Because to me, it sounds very, self-explanatory. It should be done.
So the answer to your question is nuanced. So I'll give you a really good example. I was in Barcelona in January at the kickoff for a PE-backed software business. They've got about 130 sellers, I think, across the business. They've had a RevOps team now for 3 years. And for 3 years, the RevOps team have been telling the leadership team how they should behave or what levels of consistency they want to introduce into the business. And while people bought into it in principle, in reality, nothing changed. And so you'd have a lot of kind of enthusiasm and willingness to kind of do things in a different way. But then when it came down to it, people were just too busy and they were just focusing on day job. There's a great saying of, too busy fighting with swords to talk to the guy selling the guns, right? What happened when we brought Ebsta into the business was we took those gut feel insights that people kind of knew what they needed to do but weren't getting around to it. And by going back through the historical data and fixing it and then building benchmarks from it and converting that into pictures, suddenly everyone understood. When you show people, look, on average your win rate's 12%. But if we can get 5 stakeholders actively bought in with this much engagement with this finance persona by stage 2, our win rates are 38%. All of a sudden, the penny drops. They understand why you're asking that. Now, if you combine that with better gates and triggers around the stage progression and the ability to prompt people as they go, and taking away any admin burden around that work. So now the reps are no longer responsible for extracting, for logging how well they're qualifying the customer. They aren't responsible for logging their activity. They aren't responsible for logging their contacts. They're not responsible for any of that. Now, all of a sudden, they've got no admin. The data quality is very, very high because the machine is keeping it up to date. And the insights that they're being prompted on now make sense to everybody. And then you start introducing consistency in the way you do your pipeline inspection or forecasting meetings. So, how much time do we spend in pipeline inspection meetings where we've got the seller picking out the one deal they're doing really well on and telling us how great they are and how much they love us and they're definitely going to buy? I'm not interested in any of that. What I want to do is get into the nitty gritty of what do we need to do to unstick these problem deals. And if you can't unstick that problem deal, either we need to close it off as lost or we need to assign it to somebody else. And having a consistent approach, knowing prior to the pipeline inspection meeting what questions are going to be asked, because they're all inside Salesforce, because we list out all of the things that are going well and all the things that need attention on the opportunity record. So the seller knows what they're going to be asked. The manager is able to be very specific about their questions and what the next steps are, because they're all described in the system. And they're all based on the benchmarks. And everyone knows what the follow-up actions are because they're all laid out easily. So introducing consistency isn't just about the sales process. In fact, more often than not, the consistency we need to introduce is around leadership. We live in a world where 78% of reps didn't hit quota last year, where just 14% of sellers are responsible for 80% of our revenue. This is not sustainable. The problem here are not the sellers. Churning a third of your sellers every year and then replacing them with everybody else's third of sellers that miss quota doesn't make any sense. What we need to do is instead invest much more in introducing that level of consistency and own it as the manager and show them how to win. And as long as we've got sellers that are hungry, that want to win, and we've done our job in showing them through the playbooks as to how to win, and we've taken away any distractions from them, the speed in which they end up getting close, much closer to the A players is so fast. I'm talking about in quarter, you will see a step change. So it's not rocket science, but you have to have a data-driven approach to these things.
Completely agree with you. This is really fascinating what we can do today, using leveraging technology, because to your point, we can automate the admin work, CRM updates, taking notes, finding patterns for what a good question or bad one might look like. Do you believe your reps burn leads practicing on client calls? When it comes to giving them one-on-one coaching sessions, you just don't have the bandwidth, so you get rid of them altogether? Or maybe you notice that your team spends a lot of time on non-revenue tasks like taking notes, updating CRM, or drafting emails. These are the exact challenges we solve for other revenue leaders like yourself. With Sell Me the Spend AI Coach, you can offer your reps role-play sessions at scale while automating one-on-one coaching sessions based on your best practices and methodology. Also, AI will take care of all their non-revenue tasks, like note-taking, CRM updates, draft the email for them, so they can focus on constant improvement while you're focusing on one thing and one thing only: revenue growth. If you're interested in learning more about the clients we are working with or use cases that might be beneficial to you, check us out at sellmethespend.ai. But I think, to your point, if we don't have the buy-in from the leadership, and that comes with the culture and understanding and humility to accept the reality based on data in front of us and really put into action, some work that we can bring, change as a transformation rather than just a patchwork. To your point, let's get rid of all of our BC players, and maybe we can hire more superstars from other companies that have no idea about how to sell our product in our industry. So I think we need a massive change, and it's a mindset shift. Now, a quick question about what you mentioned about 46%. I'm not sure if you remember the number correctly, of companies basically shifting toward more having full cycle sales model, like the good old, past sales, that we had to own everything from prospecting to helping the customer after the sales is done. So what companies need to really have in place to be able to at least test out, let's say, this model to see if it really works for them or not?
I think with anything with a sales team, if you're facing any resistance to change, the right way to do things is through kind of what I call FOMO, right? So pick a small department or division and do it just with them, and then make it clear that everyone else isn't allowed in this special team. And then when you start to see the results come through, then others will grasp for it. But look, unless you're in a very specific market where everyone's hitting quota and everyone's fine, and if you are, then your quotas are too low. But the reality is that we need sellers that are open to this change, and all the top performers are generating their own opportunities. We see consistently the top performers are 3 times more likely to self-source their own opportunities. So if your sellers are not going to industry events, if they aren't going out there trying to source their own because they think they're too big for their boots, all I can tell you is that I'm the CEO of this business. And we've got 380 customers, and I'm still a source for new revenue. And in fact, if I'm not at the top of the leaderboard of SDRs in the business, then I want to know why, right? So now maybe I've got an unfair advantage because I've got the CEO title, but we are all responsible for top of funnel activity. We are all responsible for looking after our customers, and actually there's some real benefits here, because if the sellers continue to earn commission after the deals are closed, then they don't need to win the whole customer day one. All they need to do is get the damn deal signed. And actually, what really matters is the onboarding and activation, because if they have a positive experience, the chances are they're going to spend more money with you very, very quickly. And you really want a professional salesperson responsible for that, rather than a success person who's worried about activation. So there's a role for all of us across the board, but consistently we've seen this is the approach that's generating the best possible outcome.
Mm-hmm. It's a really good perspective when you think about what's happening right now with AI. Everybody's worrying, I'm going to get replaced. No, if you own it, if you learn how to really manage the full cycle, I would argue with anyone that you can, get rid of a salesperson who can build human-to-human relationship from stage 0 till, end of. Hopefully, it's a, contract that expands and stays with the company. But 3-5 years, at least in SaaS, you really keep a good, healthy relationship with your client. That's invaluable. But I think the challenge we might face with moving towards this full cycle sales is Putting willpower aside, to your point, I'm the CEO of my own company. I still prospect. I still, hustle to get my deal done. I still, handhold my clients because that's what we do. Like we are in sales, and I think if you don't enjoy doing all this stuff, you're in the wrong profession. But at the same time, I think you need certain skill sets. So sometimes we give AEs the leads for many, many, many years, and they even forget how to prospect, putting the willpower aside, or vice versa. We got right now CSMs who don't even know how to upsell or cross sell. So I think there is a level of skill improvement need to be in place, and based on again clear data, as you said. Let's see what's actually working for our high performing reps, and then upskill the rest of the team to be able to actually do the same.
And incentives drive behavior, right? If you've self-sourced an opportunity, maybe you get paid more on it. Try and work out what incentives are going to lead to the best results. And step one is work out what achieves the best results. And one of the big learns from last year is people spent so much more money on marketing in 24 than they did in 23. But it didn't necessarily change the outcomes. If anything, if you're not careful about ICP, you can end up confusing your sellers, especially if they're not particularly mature in your space. You don't want them working just any old lead coming through. It really matters that they're focused on the right ICP. So marketing dollars doesn't always save the day.
Now, you mentioned something about many leaders right now, many revenue orgs are making 52% of their revenue, if I'm not mistaken, through expansion opportunities. So for the CROs watching this, like what would be the go-to-market strategy to capitalize on expansion opportunities? Because we have the data to prove that, okay, it's working. We need to actually focus on it without neglecting new business acquisitions.
Well, look, first of all, you need to make sure that those numbers ring true for you. So, when we onboard a customer, we produce an insight report for every customer, and it's a 60-page deck analyzing the whole go-to-market motion across the organization. So once we fix the data, we do the analysis, and as a CRO, you'll get a full audit of what's going well and what needs attention. But on the assumption that you've got a mature model, you've got existing customers, and you've got a success team that continue to cross-sell, upsell, I suspect you'll find that last year that team were more successful at generating new revenue from existing customers than perhaps the sales team were at generating new revenue from new logos. Now, if that's the case, even if you believe you can achieve that, what we need to do again is become a lot more data-driven in the way we support our customer base. Now, there's a whole host of data points around usage and ROI and the value you're giving your customer, and I can't control any of that. But what we can control is which personas within our customers we're engaging with. And I would argue, I don't think I've ever gone into a customer, and when we look at the top 20% of their customers, where they are as multi-threaded as they should be, where they've got the right level of engagement with their customers, and they're having the right level of engagement. Now, if you don't even know which personas you're expecting your CSMs to engage with on a regular basis, or what good levels of engagement looks like, then you're not even at the races. So what we've introduced is we have a number of scores in our product. So yes, we've got things like the qualification score, the deal scores, but the cornerstone of the proposition that we have is what we call our engagement score or our relationship score. So knowing who within your organization is engaging with who at the customer end is absolutely key. And so if when you're connecting up all those mailboxes to our platform, we can access things like the support team's mailboxes or the finance department's mailboxes. Again, we're really not that interested in the words that go back and forth, but knowing that the finance department has got a spike in engagement with a tier one customer, maybe they're not paying their bills, or the support team has had a spike of engagement. Maybe there's a support issue that's not being dealt with. So it's a great way of understanding which personas are at the customer end is engaging with us. And it's a way of monitoring that your success team are doing the right things and are engaging with the right personas in a consistent format. And once again, we can move away from this gut feel of, well, I think if we engage with the C-levels, we get a better return, to actually the analysis saying, look, when the last 2 QBRs are done at the C-level, look at our expansion rates versus if we only get someone more junior, right? Now, all of a sudden, we can see why, as a leader, I'm telling my team to do a certain thing, engage with that right persona. So being data-driven is more than just helping the leadership make decisions. It's also about articulating to our team why we're making those decisions and why it's really important that they achieve that level of engagement. And again, we can incentivize them along those lines. If you maintain that level of engagement with the C-suite, we know the outcome. We know we're going to get the cross-sell, upsell opportunities more than half of 45% of the time. But if we know that, then we can start to build incentives around it.
To wrap it up, I'm really curious to ask you about partnership referrals. So it seems like this is something that is working. It's been working for us as a business as well. It's always been working. But first and foremost, how to build this partner ecosystem strategy that we can consistently making sure that we have the leads coming.
One of the data points we looked at last year was the conversion rates from certain sources. And yes, you're absolutely right. The partner ecosystem is generating, the return on partner ecosystem is just phenomenal. So not only the win rate's higher, but the time to close is shorter as well. Yeah. And it kind of makes sense, right? It's a warmer lead. And there's a partner involved at the customer end. So we know it's worth investing in partner ecosystem, but we saw less than a third of businesses have actually got a structured partner program set up. Now, from my personal experience, I think it took us 18 months to get our first deal through the partner channel. Today, 30% of our new business revenue comes through partners. It's absolutely key to invest in partners, in that partner channel, but you have to stand strong and stick with it. And one of the really interesting takeaways I took from a podcast I was listening to last week, no one gives an F about your thing, was the sentence that kind of rang true with me. People don't care what we do. They just don't care, right? The partners are not interested in how the features work. The partners care about the outcomes for their customer, and most importantly, how that outcome for the customer can make them look good. So just try and think about it from their perspective at all times. There has to be a give before you get kind of approach. And partnerships can take a whole host of different approaches. We've personally found a huge, great vein of opportunity through the PE houses. So we've started partnering with PE houses. But we've also, we've got an amazing partner channel through kind of growth consultants and RevOps agencies. We also, most people will know that I'm also the CEO ambassador for the Pavilion community. And I'm a huge fan of community, and therefore I lent into it. And all of us, and while that wasn't my primary objective, it's become a great channel for us because we kind of promote our insights and people get to know who we are and what we're doing. But it doesn't work by just jumping into the Slack channels and start selling to people. You have to add value. You have to contribute. So find ways of contributing to trying to work out which partner channel works, because you can be a couple of degrees off and get a completely different outcome. So really trying to work out what specific type of partners are working for you, and the influence you can have, not just for them, but also on their customers, is what it's all about. And don't underinvest in it, because the outcomes are so much more valuable. Now, if you've got one seller that's performing and hitting quota, maybe they'll generate $1 million worth of revenue next year. If you've got one partner manager that's able to manage a dozen partners who are all generating $1 million worth of revenue for the business every year, that you can imagine the return you're getting on that, right? Mm-hmm. So this stuff is really worth investing in, but it takes time, it takes energy, and the chances of you hitting it first time off the bat and it being perfect is very rare. If you're able to do it, great, come and show me. It took us 18 months to get there, and I think we got there faster than most.
I'm laughing because it resonates a lot. The first one was a disaster, not because of the partner, because we didn't know as a business how to even behave. But again, to your point, I would say you have to look at it as a complete separate motion from what you do, not just a simple experiment. Let's see if it works or not, because it takes time. But when it works, and I agree with you. It's one of the best channels for us as well.
Dedicated resources. It's not a side job for one of the sellers. It's dedicated resources. We've developed a whole new program. So we're a software business. We sell licenses. You can either buy relationship intelligence or revenue intelligence from us, and that's it. Okay. However, we've developed what we call revenue insights as a service, and we deliver that either to customers as a premium on top of their licenses, or through partners. They take our engine and use it to deliver their customers' insights. Now, we weren't able to, that wasn't even something that we did when we started the partner program, and now it's a core standalone component. And our partners are taking our revenue insights as a service out to their customers and blending them with their own audits. And it's been game-changing for us. I think our win rate's about 80% off of customers that take that revenue insights as a service kind of report from one of our partners. The conversion rate for us is sky high.
This is amazing. Very smart. Last question. So right now we're talking about partner programs. We're talking about more an alignment between marketing and sales this year. How do we make sure that we can measure our marketing activities, billion dollar question, that they actually support our revenue growth? Because right now, dark social is a big thing. Like being engaged in social media, doing podcasts like this. How do we actually measure the efficacy of these practices? I know it's a little bit beyond what we discussed, but because you mentioned about marketing and sales being closer, it seems like there's some data around that. Have you considered basically bringing this unknown data to it as well? Is there a way to measure it? This, again, as I said, is a loaded billion dollar question. I don't have answer to it. So.
Look, the short answer to your question is it's different for different businesses. Marketing's been a lot more data driven for a lot longer than sales has. So your marketing department should know the ROI on different motion. It is very difficult to measure, and a lot of businesses have made a lot of money out of the dark arts in that space. My suggestion, I think a lot of businesses make the mistake of trying to boil the ocean, when in fact they may only need to do 75 deals over the next 3 years. Well, that's 2 a month, right? So why are we trying to educate the whole world? If we need to do 75 deals, okay, let's warm up 200 companies over the next 3 years, right? So who are the 200 companies you need to warm up? And really be that focused on it. So for me, the area of marketing I'm really passionate about is how marketing can be used to warm up the right personas at the next stage of the sales cycle, right? Because if we know we're going to need 9 buyers in our 9 stakeholders in our buying committee, but we're only engaged with 3 or 4 of them in these early stages, well, who are the buyers we need to get engaged with down the line? And how are we going to warm them up? And what can marketing do in the background to make sure these people are targeted and familiar with what Ebsta does before we get to them? And for me, that's the next dark art that's coming, is how marketing and sales align, not just top of funnel, but across the whole customer life cycle. And the same applies even once they're already a customer. You're keeping them as a customer. Marketing has a role to play there as well. So I suppose my caution here is what we see time and again is we underhit, we miss quota, so let's spend more money on marketing. And then when we look at the results of that, the number of deals that come through that match ICP hasn't changed. Mm-hmm. All we've done is made our salespeople's lives harder by giving them more to aim at, more noise to try and sift through to find the gold. So I would really encourage you to work. Maybe you've got a mass market approach. Maybe you need to sign thousands of customers every month, and that's great. But if that's not the case, I would encourage you to be thinking about what's going to generate the most amount of ICP opportunities, rather than the vanity metrics of how many likes you got or how many people filled in a form. We found that last year, our 2023 benchmark report was the most popular report we've ever done. Mm-hmm. And we forgot to tell people what Ebsta did in the report. So we had people coming inbound to us because they thought we were an analytics business, right? Mm-hmm. So, okay, we warmed up the market. Ebsta was famous. Great, okay? We didn't sell any more deals. People didn't know that we were a revenue intelligence platform, right? So you've got to be careful at generating the right leads is what I would encourage you to think about. It's not, more doesn't equal more.
Fantastic. Look, we just finished it on a high note. Appreciate you taking the time. Great information, great insight. Guys, if you want to reach out to Guy, we will share all the information and everything at the end of this podcast by all means. And until next time, goodbye.
Appreciate you. Thank you, Michael.